Welcome to the Refurbishment Mastery podcast with me, Martin Rapley. If you're a property investor who is worried about paying too much for your next property, concerned that you don't know how to manage a refurb, or scared that you will be ripped off by a builder, then this is for you. In this podcast, I share over 30 years of experience of managing refurbishments and conversions to help you make more profit, save your time, and ultimately enjoy the process. On with the podcast. So in this episode, I'm going to explain a little bit about the difference between property investors and developers. And this has come about because I met someone recently who considered themselves to be a property investor, and they wanted to know what was the tipping point, what was the point at which they became a developer, which was a bit of an interesting question. And in fact, in further discussion, it came to light that they didn't really fully understand my interpretation, which actually I checked and is actually the general interpretation of the difference between the two. Their view was that as a property investor, they were doing works to their properties. They were refurbishing their properties. And they wanted to know, well, if we start converting our properties, say from commercial to residential, does that make us a developer? Or if we build a new house, does that make us a developer? So that in their mind, the definition of developer was very much the complexity or the size of the works that they were doing. And we're talking here about refurbishment works, conversion works, or indeed building a new property out of the ground. So there's kind of three things we can do to our properties. And in their mind, when did something get so big that it made them a developer? I'm not entirely sure why they wanted to know what made them a developer. I'm not sure it was necessarily a question that they needed to know, but some people would like to have a position. And I think in their mind, they believed that if they called themselves a developer, they were seen as being grander than they were perhaps perceiving themselves as a property investor. So what I explained to them that is, in my mind, and as I say, I verified all of this afterwards, in my mind, both developers and property investors refurbish, convert, and build new build properties. So those three are ways of adding value to a property. That property may be an existing property that is run down, and you add value by refurbishing it and bringing it back to life. That property may be an existing property that you convert into something better. Perhaps a house gets converted into an HMO. Maybe you convert a shop into a flat or some offices into apartments, but we are converting something to add value. And then the third thing is we are taking a property, which could just be a field, could be a building that's dilapidated and in very, very poor condition, and we are demolishing that building, or we've got to get back to an empty plot, and we are then building something from new. And that we could be building a house, we could be building a block of flats, or indeed we could be building a commercial property with offices or a mixed use or something like that. So I believe that we can be doing refurbishment, conversion, or new build, whether we are property investors or developers, because the difference is nothing to do with size or complexity of the scheme. The difference is actually our intention, what we do with these properties after we've done the refurbishment, the conversion, or built them. And the difference is that property investors hold their property for the longer term. Okay, so they refurbish, they convert, they develop. They aim to hold their property. They would move some tenants into the property, residential tenants or commercial tenants. They move those tenants in and those tenants pay them rent, which generates a cash flow income. So in residential situations, we earn cash flow income every single month when the tenants pay us rent. In a commercial situation, that can sometimes be monthly, but sometimes also be quarterly. But again, we earn cash our money in a regular process. And then in due course, we aim to gain some equity growth from that property. If we own a property for the long enough, we expect it to increase in value, and we could do something with that equity at that point. We could sell later on, we could refinance it later on, or we could just reflect that equity back into the balance sheet, and that's something for you to discuss with your accountant. So property investors are holding property for the longer term. Developers, on the other hand, will aim to refurbish, convert, or build from new. But when they get to the end of that scheme, they will have the intention to sell that property. So they will sell it to someone who wants to buy it as a family home. They'll sell it to a company that need it as a commercial building, or they may sell it to an equity fund or something like that that hold the whole scheme. But their intention is that at the end of that project, they earn a lump sum income in the form of profit to for the efforts they've put into their project. So there's nothing to stop you changing direction partway through. Which is why it doesn't really matter whether you call yourself a property investor or a developer. It doesn't matter at all. So there are property investors that fully intend to refurbish their property and hold it for the longer term. Something comes about, they need the money, they decide to sell it. That's not a problem at all. And goes the other way as well. There are developers that fully intend to sell their property at the end of the conversion process, and for whatever reason, they hold on to some or all of the properties. Maybe the market crashes, so it's better to rent them out. Maybe they don't get the income they wanted. Maybe they just change their strategy. So property investors and developers, to a certain extent, are a bit of crossover. That we could all set off with one intent and become the other just by circumstances that come about along the way, or just other just changes, other things that come about along the way. And one of the biggest reasons that we may well change, particularly from a development, switching from a developer to a property investor, is that we are, as a developer, forced to hold the property for the longer term. And the common thing that forces developers to hold the property for the longer term is that they haven't got enough income if they sell that property off. They can't sell that property at a high enough figure to actually generate the profit that they wanted to generate from that particular deal. And so this is where property developers can very easily become property investors. From an investment perspective, if you spend money on a refurbishment, there is no reason for you to actually add more value than the cost of that refurbishment. It doesn't matter at all. A lot of property investors do want to add value from their refurbishment, but there's no real reason to, apart from recycling funds quicker. So if you buy a property for £200,000, you spend £100,000 refurbishing it or converting it, doing something with it, so that you've spent a total of £300,000, and your end property is worth £300,000 or less, and you're a property investor, that isn't necessarily a serious problem. Because as soon as you move tenants in, you're going to start creating this cash flow income. And every single month, your tenants are going to be paying you rent, and therefore you've got income coming back to you. It doesn't matter that you spent too much in the first place because you've got your cash flow income. And for some property investors, that absolutely works every day of the week for them. Any property investors that are looking at building a portfolio, particularly looking at building a family portfolio that is perhaps going to be passed on through inheritance, subject obviously to managing that element of it. But if you're trying to build a legacy for the next generation, then you don't need to add value in the short term. You just need to get some cash flow, and because there's likely to be some equity growth in the longer term, everything will come good. Whereas, of course, if you are a developer, your whole business model is based around buying a property, adding value to it in one of those three ways, and then selling it to create your profit, to create your salary, to create what you need to live on. And so if you don't add value from a development as a developer, then your business isn't going anywhere. And actually, that isn't sustainable. So you've got to be very, very clear here. There is more risk in being a developer because of the need to add value to every single project you do. There's a bit less risk as a property investor because you don't have to add value to every single project you do. It's obviously good if you can, but it doesn't matter if that value is a small amount or a large amount, because you're going to get your income from cash flow. As I say, you may refinance and take some of your money back out, but it's not a fundamental failing of your business model if you don't add any value. Whereas as a developer, your business model has gone to pieces if you can't add sufficient value to your project. And in many ways, this is why we sadly see a lot of developers, to wind up businesses and go under, because they failed to add the value they wanted to add. Now, we've obviously got to be well aware of the finance we've got for our project and how does all of that work and how are we going to get our money back out and can we repay loans and things. So there's other things to consider here. But the difference between an investor and a developer is nothing to do with the size of the project, the complexity of the project, the type of the project, or anything like that. It is solely down to the initial intention of what we're gonna do with the property after the works have been done. So there's lots and lots of people that are actually both property investors and developers, because they develop, they hold some, they sell others, or they're property investors that were great. They were more than happy doing property investing, and then suddenly they picked up a deal, they refurbished it, someone made them a cracking offer, so they sold it. So the two actually blur together. And you could be both. You could be doing some properties, some refurbishments as a property investor, and some refurbishments, conversions as a developer. It doesn't really matter. The key thing is that everything I teach, every method that I teach, every process I teach, doesn't make any difference if you are a property investor or a developer. I principally teach the mindset that we want to add value, because even as a property investor, I want to add value to my properties. And by the way, I'd consider myself a property investor. I have definitely refurbished properties that I've ended up selling, although generally I've sold them with tenants in situ. So I've kind of run them as a property investor and then sold them on later on. I don't set out with the intention at the moment of being a developer, but that's not to say it's never. It's just to say that where I've been so far, I've been a property investor. But there's no golden line you trip over where you turn from a property investor to a developer, because really it all comes down to the intent at the end of the project. And as I say, if you change your mind, no one's going to beat you up about it. You do perhaps need to take some taxation advice with respect to the way you've set your business up and the impact on that. As far if you set up as a property investor and continually operate as a developer, you will need to take some advice on that. I can't give you advice on that, although I can perhaps talk about it in some other podcasts in due course. It's take your own advice in that respect. So in many ways, call yourself what you like, be what you like, accept that potentially some people don't really fully understand the difference between a property investor and a property developer. You can correct them if you want to. It's not something I've ever felt I needed to explain in a lot of depth, but I thought I'd just make this episode to explain it for those of you that want to be more precise and want to title yourself accordingly and know that you're talking about yourself correctly. And for those of you that are just generally interested, that is the difference between a property investor and a developer. And the important thing to remember, as a developer, you must add value. Otherwise, the business falls to pieces. As a property investor, it doesn't matter quite so much, although adding value obviously is a good thing. It doesn't matter quite so much if you don't add value.
Thanks for listening to this podcast. Please do like, share, and leave a comment where you can. If you need any guidance or advice with anything to do with your refurbishments or conversions, then don't hesitate to reach out. You can book a free call with me by clicking on the link at the top of my website, refurbishmentmastery.com. There's other ways you can contact me in the show notes as well. I look forward to speaking to you again soon.